How can you make $100,000 from trading Forex? Is it even possible? Because many traders don't break down their goals into actionable steps, 99% fail. But in this video, I'm gonna give you a 5-step process that's going to best prepare you to hit that 6-figure target. Let's get into it. The first step is obvious, and it is that you need to learn how to trade. Now, we're not going to spend a lot of time on this topic in this video, but these are 2 things that you wanna keep in mind if you're at this step or if you are near it. The first relates to your personality. You need to find a trading strategy that fits your personality. Just because there's a strategy that's working for somebody else online or one of your buddies, it does not mean that it's going to work for you because it might not fit your personality. If they're trading the 15-minute chart and you're an anxious person or you don't have enough time to spend on the 15-minute chart, no matter how great the strategy is, it's not the right one for you. So keep exploring until you find something that best fits your style of trading and your personality. Secondly, for the most part, as traders, we are very impatient. So if you want to speed up your learning process, I encourage you to potentially take a paid course and join a paid community. But there's an important caveat to that, and that is that many traders, including myself when I first started, are easily sold into the idea that there are traders out there that are selling a secret to success, and without it, we will not be able to become traders or profitable traders, and that simply is not the case. I spent $10,000 on Forex courses thinking that the information that I needed was not available for free online and that they had the secret sauce, but that is never the case. So please do not be fooled by people that are telling you or trying to sell you the idea that their way is the only way. And that's coming from somebody that has his own course, but really I've come to realize that every paid course online is just a regurgitation and a reformulation of free information online. Because it's formulated in a way that is likely and hopefully more efficient, it will help you speed up that learning process. But if you don't have the money to invest in a course, or if you simply don't want to, don't worry, you can do it on your own. The second step in the 5-step process to hitting that 6-figure $100,000 target is to just get consistent. This is likely the most difficult stage, and it is therefore the stage that the vast majority of traders just neglect and do their best to skip through. But this is where the foundational elements are laid, and your success therefore depends on it. But the question is, what does it even mean to be consistent? Consistency is when you do not let the fluctuations of the market or the fluctuations of your mind dictate and impact the trading decisions that you make, and they do not allow you to deviate from your trading plan. Now, on face value, you can become consistent overnight. There isn't anybody holding a gun to your head forcing you to do things that are outside of your trading plan. If there is somebody doing that, I recommend you call 911. But because this is not the case for hopefully everybody watching, we mess up our trading and we don't follow our trading plan because of ourselves, because of our lack of discipline. It's so difficult to be consistent because of the world that we live in and the instant gratification. We want that money and we want that success overnight, but trading does not work that way. Nothing in life works that way. And so we need to build up and really prioritize that discipline, because that's what's going to allow us to be consistent. At the end of the day, it all boils down to yourself. Some of us need to burn through some old karma and learn lessons the hard way, and others are able to just flip that switch, David Goggins it, stay hard, and from pretty much day one, just focus and execute their trading plan flawlessly. I was not in the latter, I was certainly in the former, but it all comes down to how much discipline you actually have. Regardless of whether it takes you 1 month or 10 years, this is the stage that is most often neglected and skipped, and it is the single reason for why most traders never see success in stage 3. Stage 3 is where things start to get really exciting. Just a handful of years ago, trading Forex was exponentially more difficult because you were forced to grow your own tiny personal account. But that's all changed. With funding companies today, you can trade millions of dollars of capital and make more money than you could possibly dream of. But let's not get carried away. Unless you're a trust fund baby, the first step here is to actually take and pass and become a funded trader. The first step is to determine what company you want to go with. I, of course, recommend Lark Funding because I am the owner and I am therefore biased. But the great thing about Lark Funding is that unlike some of the big boys in the game, there is no time limit and there is only one stage that you need to pass. But regardless of what company you go with, you need to prioritize. You first need to figure out and then prioritize prioritize certain aspects of funding challenges that you think are going to be most important in helping you pass. Do you actually need that 1 to 100 leverage? I highly doubt it. Maybe you don't mind having 2 stages, but that 30-day time limit with current market conditions might be a little bit tricky. These are questions that you need to ask yourself, but because there's a lot of competition in the funding space, it can now be the difference between you passing and failing. So definitely do a little bit of research and determine for yourself what company is going to help you the best. In terms of strategies to help you pass your funding challenge and become a funded trader, I've made several videos on this channel outlining different strategies and techniques and frameworks, but here are 2 things to keep in mind. The first is that you want to have a ruthless filter when it comes to your first trade. When I was taking my FTMO challenges, I was very conscious of the fact that the challenge started upon that first trade, and I wanted to start that challenge with momentum and with success. So if you're taking an FTMO challenge, make sure that the trade you are starting your challenge with is the best cream of the crop setup that you can possibly imagine. For me, that's a daily or weekly setup with at least 3 confluences, hopefully more. Looking back, I don't know if I've taken a challenge where the first trade was a loss because I was so diligent in making sure that that first trade really fit my trading plan. Even if you don't take a time restricted challenge and you go with a non-time restricted challenge like Lark Funding, I highly encourage you to still be ruthless with that filter because the name of the game is momentum. You don't want to be starting on a loss because then you're already playing catch up, and it's just not great for your trading psychology. So be ruthless with determining what trade you're going to take to start the challenge. The second strategy and framework to help you pass your challenge relates to risk management. There's 2 ways we can break this down. Both are dependent on what kind of challenge you're taking. If you're taking a time restricted challenge where the drawdown is larger, such as FTMO or my Forex funds, I recommend you use what I have called the 3-3-4.5 risk strategy. What this strategy is on your first 3 trades, you're going to risk 1%, and you're going to continue to risk 1% until you grow your account to 3%. Once you're up 3%, you're going to risk a 3%. If that is a loss, you'll be back to break even. If it's a winner though, however, you will be up a minimum of 6%, which means you only have 4% left to pass the challenge. So on your final trade, you're going to execute that 4.5 in the strategy. You're going to risk 4.5% on that final trade to hopefully get you over the edge and pass. This is necessary on time restricted challenges because there's only 30 days and these companies unfortunately are forcing you to not remain risk managed, but this is a pretty effective way of getting around that. If, however, you are taking a non-time restricted challenge that likely only has 1 phase, such as Lark Funding, my recommendation is to start small and build up momentum and build up that consistency and confidence. So I would recommend you actually start potentially less than 1%, maybe 0.5 to 0.75. Start to build up that account because again, there's no time limit. So if it takes you 3 months, it takes you 3 months. The more patient you are, the more effective you're going to be, and the less likely you are to make mistakes that deviate from your trading plan. So on those challenges, start small, build up that consistency and that momentum. Upon passing, we then enter stage 4 of the 5-part framework to help you hit $100,000 in Forex trading. And that step is actually to take a step back. Once you're funded, you need to reassess your goals and do a little bit of math to help you determine how much money you need to generate in order to hit that $100,000 target. Now, of course, if your goal is $100,000, you need to make $100,000, but having that North Star alone isn't very effective. What we want to do is break this goal down into bite-sized, actionable chunks because it's going to be much easier and much less overwhelming to help you get there. The first question is, how much are you funded with now that you passed your challenge? If you passed a $50,000 challenge, that's phenomenal. Congratulations. But to make $100,000 off of that account is going to be unrealistic and incredibly difficult. You're going to need to make a 200% return in a year. Goldman Sachs will be calling you if you manage to do that. So you want to prioritize larger capital and larger funding over larger returns because this is going to dramatically reduce the amount of stress that you're putting on yourself and the burden that you're putting on yourself as well. To have a $100,000 funded account, you need to make a 100% return in a year to generate that $100,000 withdrawal. And I'm not saying that's impossible, but again, what if you had a $400,000 account? I don't do math in public, but I'm pretty sure that means you only have to generate a 25% return over 12 months, which is quite reasonable and and I'm sure to many of you watching, you think is very manageable. The golden question here is, what kind of monthly percentage return can you generate every single month? You need to ask yourself this and look at yourself in the mirror with your answer and see if you truly believe it. When I started trading, I wanted to generate 10%, 15% every single month, but perhaps deep down, I didn't actually feel like that was a consistently achievable goal. Sure, some months were great and I did hit it, but every single month, I don't think that's realistic. So you need to ask yourself this and then work backwards from your funding size to determine how much funding you need in order to hit your financial goals. Remember, $100,000 is only $274 a day. It's nothing if you have a 100K account. That's 0.274% every single day, which again is nothing. Nobody online is flashing these returns and gloating about, oh, I made 0.274% today, because it's not enticing, it's not exciting. But if you actually multiply that and you compound that over a year, things really do become quite unbelievable. So don't be fooled by these insane $10,000, $15,000, $30,000 days that some Forex traders post. If those are real, that's fantastic. Don't get me wrong, I'd love to make 30 grand in a day, but for the more average Joe, it's not necessarily accessible. But by breaking it down, $274 a day, it makes it seem like a joke. If you have $200,000 of funding, you cut that 0.274% in half, and I think anybody watching this can consistently do that. Once you have your funded account, you've reassessed your goals, you've taken a step back. Now the only thing to do is, as Nike puts it, just do it. You're gonna have to put the work in. There's gonna be times when it is frustrating and you're not hitting those goals, but these are 3 things to keep in mind when you're at this stage that's gonna help you get through those difficult times, those difficult and maybe slower trading periods, and put you in the best situation to hit that $100,000 target. The first is the stoic approach, and this approach dramatically changed how I approach trading. We as traders like to focus on the output goals. We like to focus on how many pips have we generated, how much money have we made this month, but the unfortunate reality is that all of these things are outside of our control. We can't control how many setups the market gives us. We can't control how well those setups do arise, but what we can control is our trading plan, our risk management, how well we execute our trading plan and follow our trading rules. Because these things are within our control, if we assess how we can set goals within the framework of what's within our control, then we're actually going to be able to be consistent. You can be the best trader in the world, but if the market doesn't give you enough setups, you might not be able to make 100 pips in a month, but you will always, no matter what, be able to execute proper risk management. So the stoic approach is all about focusing on what is within your control and forgetting and letting go the things that aren't within your control. This is going to help you a lot when you experience losses, consecutive losses, and if you get a little bit discouraged and down on yourself, just continue to focus on what is within your control, and as the Stoics say, that is where you'll find strength. This brings us to the second tip, and that is how to deal with losses. I have a bit of an anger issue. I'm not embarrassed to admit it, especially, I'm much better now, but before with trading, if I had a loss, I would kind of just blow my top. I'd be incredibly frustrated, and part of that was because I was focusing on things that weren't within my control. But I think a framework that helps to deal with losses is to really think of trading as a business. This is the mindset that we should be having from the get-go, but thinking of things like this really does help with losses. When you're running a business, you understand, and it's widely accepted, that you're gonna have business expenses, which are losses, but it's just part of the game. It's growing pains, and they're a necessity. Those business losses or business expenses when it comes to trading are just your losses, are the trades that don't work out. Why beat yourself up if you understand and accept that trading is a business? In business, there are business expenses, so why not just take the same approach with trading? If we accept that they're losses, we can then just try our best to learn from them. So whether that's through journaling your trades, which I think is an effective method, or just sitting down and figuring out why that trade didn't go the way you wanted it to. Sometimes there isn't a reason, it's just the law of averages. But really focusing on your trading as a business, I think will help with those losses. And again, if you learn from the losses, it's not really a loss, it's just a learning opportunity. The third thing to keep in mind is the importance of patience. In the world that we live in, we're all addicted to instant gratification, but trading does not fit that way of living, nor should it. Warren Buffett only made his first million when he was 30 years old, and he made his first billion at 50 years old. We can look at him now and be like, wow, I would love to have just a fraction of his money, but nobody really wants to wait as much time as he did. Trading is a game of compounding, it's a game of iterations, and if you don't allow yourself the patience, and if you don't allow yourself to compound not only your knowledge, but your skills and your trading account, you're not gonna get where you want to be. I would love to be a millionaire tomorrow. I'd love to be a millionaire yesterday, but we have to focus on the compound game, and if you're not patient, you're gonna be shooting yourself in the foot. So when things get tough, and even when things are going well, make sure you remain patient, focus on the compound gains, and you'll be able to look back after a certain period of time and be like, wow, that was slow at the beginning, but things really did take off over time. It's all about playing those compound games. So, what did I miss? Over 60% of you watching this channel are not subscribed. If you made it this far, I'm sure you got some kind of value out of it, so please do me a huge favor, hit that subscribe button. It helps the channel grow. I'll see you in the next one. Thanks for watching, and until then, peace.